Welcome to the WorldWire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. This week, Beijing stunned the world by slapping a 75% tariff on US electric vehicles, instantly shutting American automakers out of China's massive EV market. This isn't just about economics, it's a bold political move, a direct response to US protectionism, and a sign that global auto trade is fracturing under geopolitical pressure. For US companies, the dream of selling millions of EVs to China's middle class has vanished overnight. Their products are now priced out, unable to compete with China's homegrown brands. The new tariff forces American automakers to rethink their global strategies, triggering costly restructurings and raising questions about their future in the world's largest EV market. This is more than a corporate battle. It's a shift that will ripple from factory jobs in Michigan to car prices in California. The 75% tariff marks the moment when EVs became weapons in a deepening trade war, linking the race for the car of the future to the fight for global economic supremacy. The era of open, globalized auto trade is over. National security and industrial policy now drive decisions, leaving the industry's future uncertain. The road ahead for automakers is suddenly more complicated and far less predictable. The electric vehicle, once a symbol of global cooperation, is now at the center of a high-stakes geopolitical showdown. The world's auto industry has entered uncharted territory. China's 75% tariff didn't come out of nowhere. It's the latest escalation in a years-long trade war. The US kicked things off in 2024, imposing a 100% tariff on Chinese EVs to shield its own industry. The next year, new US tariffs stacked up, pushing the total cost for Chinese EVs entering America to nearly 250%, making them unsellable. China hit back, first with sweeping tariffs on US goods, then with the 75% EV tariff, targeting a high-profile American export. The result? A vicious cycle of retaliation, with each side justifying the next move. The global auto market is now split. The US and allies building their own EV ecosystem, China leading a rival bloc. Other countries are caught in the middle, forced to pick sides or walk a tightrope. This isn't just about cars, it's about two superpowers unraveling decades of economic integration. The electric vehicle has become a primary battleground in a much larger struggle. The prospect of de-escalation is fading fast. The world's auto industry is being redrawn by tariffs, not technology. For Tesla, China was once the linchpin of its global ambitions. Now, the 75% tariff has made US-made Teslas unmarketable in China. Tesla's Shanghai Gigafactory is now its only way to serve Chinese customers. But this deepens its dependence on a single, politically risky market. Elon Musk warned that Chinese EV makers could crush Western rivals without trade barriers. Now, those barriers work both ways, locking out both sides. Tesla must localize its supply chain in China, but that's a gamble if relations worsen. Ford faces a different crisis. Its electric transition hinged on global scale, with China as a key market. The new tariff slams that door shut, leaving Ford unable to compete in China and forced to focus on North America and Europe. Billions invested in EVs were based on a global market that no longer exists. American automakers are now playing defense at home, while Chinese rivals expand worldwide. The US market is protected, but international growth strategies are in ruins. The global EV race is now a fragmented contest, with American and Chinese companies fighting on separate fronts. The stakes for Tesla, Ford, and their peers have never been higher. The future of American automaking is being rewritten in real time. The US-China trade war is redrawing the global EV supply chain, and Southeast Asia is emerging as the new epicenter. With direct trade routes blocked, automakers are pouring investment into Thailand, Indonesia, and Malaysia to bypass tariffs. Thailand, already a regional auto hub, is attracting Chinese giants like BYD, who now assemble cars there for export to Europe, dodging China-specific tariffs. Indonesia, rich in nickel, is becoming a battery powerhouse, drawing in global manufacturers eager to secure critical minerals. Malaysia is carving out a niche in high-tech auto parts and semiconductors, supplying new regional assembly plants. Together, These countries are forming an integrated EV hub, fueled by capital fleeing the US-China standoff. The trade war meant to protect American industry is accelerating Southeast Asia's rise as a global EV competitor. The world's industrial map is being redrawn in real time. Global capital is moving fast, chasing new opportunities in neutral territory. The next chapter of the EV revolution may be written in Southeast Asia. The US-China EV trade war isn't just a two-player game. Other economies are being forced to take sides. Europe raised tariffs to shield its automakers, but German brands fear Chinese retaliation could devastate their sales in China. The EU is now negotiating with Beijing, seeking compromises like price floors to avoid a full-blown trade war. Some in Europe even considered dropping tariffs to de-escalate, highlighting deep divisions. Canada faces similar pressure. Aligned with the US, it's considering steep tariffs on Chinese EVs to protect its own industry. But Canada's agricultural exports, like canola, are vulnerable to Chinese countermeasures. Both Brussels and Ottawa are walking a tightrope, balancing industry protection with the risk of economic blowback. The ripple effects of the US-China conflict are forcing a global realignment. No country is immune from the fallout. For consumers, the trade war means higher prices and fewer choices at the dealership. US buyers are shielded from cheap Chinese EVs, but also miss out on affordable, innovative models like the BYD Seagull. With tariffs, a car that costs $8,000 in China would sell for nearly $27,000 in the US, if it were even available. Protectionist policies keep prices high and limit options, slowing the adoption of electric vehicles. American and European automakers struggle to offer EVs under $30,000, while Chinese brands have already mastered this segment. The market is fragmenting. A car built in Thailand might be cheap in Europe, but costlier in North America. Your passport now determines your EV options and price. The dream of a global marketplace is fading, replaced by regional silos. Consumers everywhere are paying the price for a divided world. The EV revolution is being shaped as much by politics as by technology. The 75% tariff is more than a trade dispute. It's a turning point for the global auto industry. The era of globalization is ending, replaced by regional blocs and fierce national competition. The EV, once a symbol of shared progress, now marks a world splitting into rival spheres of influence. In North America, automakers must build self-reliant supply chains, but risk higher costs and slower innovation. Meanwhile, Chinese brands are expanding aggressively into Southeast Asia, South America, and Europe, building a parallel automotive universe. The industry's future is uncertain. Will the two blocks remain separate, or will new manufacturing hubs bridge the divide? What's clear is that buying a car is now tied to geopolitics, trade barriers, and national strategy. The global auto industry is being fundamentally reshaped before our eyes. The choices made today will define mobility for decades to come. In this new era, every car tells a story of international rivalry and shifting alliances.